Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, July the 7th, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High-level overview, wave 1 is done, working on wave 2. Only question at this moment in time is this wave 2 over and we're ready to go blasting off? Or do we still need to go lower low? Somewhere between where we are and our original deep target down here around 80. What we were looking for, you go back to early 2008, we bottomed here and right around that 70.5365 area, depending on which platform, and we did a beautiful move up. If you'll recall, way back in this arena, we talked about this thing rallying toward 115, 120. Took us a long time to get up there, but we finally reached our target, 115. We got to 114.72, not too shabby. And since then, we've been talking about a multi-year correction. And what we were thinking at the time, Mr. Tucson, Ian, is we were looking at this low, looking at that high, thinking it's going to be a multi-year correction. And typically after that, you get a deeper retracement. So we're thinking somewhere around that 618 retracement, which would have been around 87, or the 786 zone, somewhere in here. So we're not quite there yet. Does that mean we could still go lower? Yes. Do we have to go lower? No. And just remember that once this wave 2 is over, what happens? We go breaking out. So to make things simple, long as we're below this pink box, doesn't mean when we touch into the pink box that it's definitely a breakout. It could be, but we got to get above this pink box. But as long as we're below it, there's more pressure for us to go lower low. So far, so good. So a pretty simple picture. That low, that high. Is this correction over? As long as we're below this, it's very questionable, or sus, as they like to say, suspect, sus, that this is not over until we clear this hurdle. So are we going to rally and fizzle and go lower and keep stair-stepping longer? It can last another few more years. There's no time limit on this either. After 15 years up, we're almost into this correction, 4 years. So maybe we grind this further to make it 5 years, a nice 5-year correction over a 15-year move up. It's kind of balanced, nice proportion. Not to say that's definitely going to happen. You get my point. So again, as long as we're below this, we're likely need to go lower low. Is this the end? Possibly. But let's take a look at this more in tune on what this move higher has been. It's been struggling. It's not like it's been just ripping to go breaking out. And we kind of seen this behavior before. We get a nice push lower. We just kind of chop for a while. Looks like we're going to break out. Where we chop sideways, we did make a new high, and then ultimately it gave up. We went lower low. So notice we've been chopping in here, and then now we have a new high. Kind of like, is that a repeat of this? And then we're going to give up and go lower low still. Well, we shall see, but that's why this is here, to show you that as long as we're below it, still more likely we probably need to go lower low. But please remember, I'd be remiss if I didn't tell you, this wave 2 is going to end somewhere here, or maybe down here, or somewhere in between, and ultimately go breaking out. The great news is once we get above this pink box, the probability that would be the low is extremely high. And then we would go on a multi-year climb toward our 130, 140 target. So jumping into the charting platform, we can see the NASDAQ. Well, we can see the dollar index kind of did make a new high. We went right to that zone we talked about last time when we had this pullback. We broke the 618. We said we have a 75% chance we're going to go up to 101. 70+% we'd go up to about 101 and a change here, 101 and a half. And that's exactly what we did. This is proportionate of a bigger ABC right now. What am I talking about? This right here. So this could be the initial A. This could be the B. And that could be the C. And if that's the corrective move, the better move would be a new low, because the prior downtrend, even though I've been moving sideways here, prior move was down over here. So if this is the correction, then we go lower low. Is that what's happening? It's possible. Well, one thing's for sure. If we break down and we don't hold this 100.5 area, which we kind of broke out of and more or less retested, we came awfully close right there. So on that back test, if this doesn't hold, we start closing below, then where's the next logical target? The 618 retracement zone of that low, high. That's my 618 zone. So if we don't hold that, what happens? We break below this 150 area and close below it. Then we're going to visit the magic Fibbo. That's this orangey line. And we don't hold that, then we're going to go lower low. So this is the rubber meets the road. This swing point low, which kind of a double bottom here, if you will, that swing point low, if we don't hold this breakout zone, you can see where we broke out from this green line. We don't hold that, then we're definitely going to come down, in my humble opinion, toward this magic Fibbo. We don't hold that, we're expected to go lower low. 75% chance we'd go lower low, which means we would break the swing point, which then sets the tone. We're going low. Play out. Which one is going to play out? We shall see. So once again, why is this proportionate? Remember, when A, B, C type of corrections, a big, beautiful correction plays out in the midst of A, B, C. A typically equals C, or A times 1.272 equals C. And in this example, if you take this move up for A, you get the B correction, and then you take that move up for C, it went right to the 1272 area, which is proportionate for a C correction. If this was a 1-2 going up in 3, and we're breaking out, which ultimately we're going to, right? This wave 2 has got to end somewhere, and then we go breaking out. But if this was a 1-2 going up, then it's possible we could come down and nest and do a 1-2, 1-2, and ultimately still go higher. But as we start breaking below this, it sets the tone we're going lower low. So I know that's quite a ways to go from 100.9, where we are now, down to this 97.80 area, basically 97.50. We get a nice little move, several points. But if we break below this, the likelihood we're going lower low becomes extremely high. So is this the correction and it's over and we start breaking down? Possibly. What if we hold this support zone and we go breaking out? Then it would push us toward this upper quadrant, maybe push it toward 102, maybe this 102.50, but it's a far cry below our big pink box. So what I showed you on that other chart was that the big picture, that's this chart here, that as long as we're below this, the probability we probably need to go lower still looms strongly. And once we get above this pink box, the probability this is over and we're breaking out becomes extremely high probability. Pretty simple so far. So what does that mean? That means we're stuck. We're kind of just chopping and grinding in here. Software is more or less overbought, starting to depressurize a little bit. That's why when we reach those targets a week or so back, I mentioned, I said, this is due to start to depressurize back to the downside because we have a daily overbought, the weekly's overbought, and we're just kind of in overbought territory, which expected this to come back. This doesn't mean we're definitely going lower low, but this is why you look at the technical picture. If this is the ABC and we start breaking down, we're breaking down into pieces for you. That if we can't hold this 100.5, which is the prior breakout, you can go back for about a year. We've been testing that zone. We broke below. Oh, it looks like we're breakout. No, we didn't. Went straight to 102, failed, came down, retested. So ever since June of last year, over a year ago, we failed. We tested, failed, tested, failed, tested, failed, and we kept going lower, low, lower, low, lower, low. We tested again over here, failed, and now we finally broke out. So this is why that green line, major battle zone, former support, turn resistance, 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 resistance. And now, did this break above retest reconfirm it's now support and we go breaking out? Sure, it could be. The only way to know that is we got to get above that swing point, which we just reached as we started pulling back. But incrementally, if we break below that support zone, I'll move this up this way so you can see it. The support zone, we break it, then we're going to go down to magic Fibbo. We don't hold the magic Fibbo, then it says we go lower low toward these extensions, which means we break this swing point. So we have the support zone here. We have this top here. If we don't hold the breakout to go higher and we close below it, I like to see like a candle body, not just a little wick dipping below here, but a candle body close below. Then it says we're going to go visit the 618 retracement zone. What is that 618? It is from that low up to this high. You run your extension and you can see my 618 sits there and my 786 sits there, which is this green box. So that if we don't hold this, we go to the magic Fibbo area, which is right around that 618 retracement zone. We don't hold that, we go lower low, where you can see your extensions 97, 96.50. That by doing that, we break that swing point, which ultimately says we're going lower low. And we've been discussing this for months. Even this, we've been working on this for 4+ years, right? Almost 4 years of this correction. And as of late, you get these lows. Is that the breakout? No, I didn't think so. We made a lower low. We did the same thing. Nope, still not. Made a lower low. And we keep talking about it. I'm not convinced that this is the low. I wasn't convinced. And I'm still not convinced until we get above that pink box. Then we're very convinced. But you get the point that these rallies, we went lower low yet again. And this one, we said the same thing. A lot of chopping and overlapping and just didn't fit right. And what happened? We went lower low. So at some point, remember, these lower lows are going to stop and we will go breaking out. But is this the one? Doesn't right now proportionally, now I'll take off all my line, proportionally from this recent low, this A, B, C is proportionate for a reversal. As we made up to the extensions, we talked about that a week plus ago, that we grinded above the 618 from the prior high to low. We grinded above, we broke above the magic fibbo, we broke the 618. That said, we had a 75% chance we'd go to 101 and change, 70 plus, we'd go to 101.50. We did exactly that. Took some time, grinded and grunted, but it did it. But this whole big proportion, once again, where you get a correction, A, B, C type of correction, A, B, C, typically A will equal C, or A times 1.272 equals C. And when you run your 3-point tool on this, that's what this is all about. We have the low, we have the high, we have the higher low. We went right to that 1.272, which right now this looks like A equals, well, A times 1.272 equals C. So that's why if we start breaking back down and we break this low, then it's extremely likely we're going lower low. Amen. So what does that mean? We go one tick below here. It's not over. We still got more downside in that wave two. Didn't finish here, wasn't finished there, wasn't finished here, and is it finished here? We break this low, the likelihood we go lower low becomes extremely high. So then we'd say, well, we get one tick lower, then obviously that wave two can't be complete. What's another reason why we believe there's potential for more downside? Well, the main reason is go over here to the software. We talked about this like last week or so when the daily was back overbought. We talked about needing to depressurize. We got our triggers lower and started pushing lower. And on a weekly chart, we're in overbought territory. Now, Mr. Tucson, this hadn't officially hooked and crossed like before, hooked and crossed, but we're hooking and we're pinching. So this could be a key to watch. If this thing can not only hook like it's doing, but our trend momentum, green crosses below the red, like there, or there, or there, or there, you get the point? We cross back over, then as the weekly hooks and crosses, what does that mean? The daily is going to cycle all the way down. What happens if a monthly hooks and crosses? The weekly cycles. If a 4-hour hooks and crosses, the 1-hour cycles. If a 1-hour hooks and crosses, the 30 and the 15-minute cycles. If a 15-minute hooks and crosses, the 5-minute cycles. Get it? So you could use that to your advantage, because once a daily hooks and crosses, the 4-hour cycles, and that takes roughly 3 to 4 days, 2 to 5 days in that range. What happens when a weekly hooks and crosses? The daily cycles, and that takes like 2 to 5 weeks. What happens when a monthly hooks and crosses? That means the weekly is going to cycle, and that takes like 2 to 5 months. And you can use that to your advantage when you're, say, trading options. Well, I need to know how long could this play out? And this is what this kind of gives you insight on. So, we're going to go breaking down. Weekly hadn't hooked and crossed yet, but that's why we said last week, hey, be careful. We got this ABC. We reached the proportions, and my weekly's overbought. My daily's overbought. We expected this correction to come down. So is this going to go breaking out after retesting the breakout? Former resistance turn support. Is this going to go breaking out, or are we going to break below? We break below this line, then we're going to get sucked and pulled into the Ichimoku cloud. That's what I love about this between the Ichimoku and our Fibonacci levels. Guess what this breakdown of this level toward the magic fibbo? That's the Ichimoku cloud. Huh? Look where it's located, 99 and change, right in that area. And look where my 618 is. between that 99 and change and down about 98-ish is the 618786. Look at the Ichimoku cloud. Look where we are, 99 and change down to 98-ish. Huh. Isn't that interesting? So if you take this low, you take that high, my 618786 zone is kind of right here in this Fibbo area, which would be right here overlaying this Ichimoku cloud. So there you have it. So when I look at this chart, it says we break below this support zone. Where are we going? Sucked and pulled into the cloud. What else do we know? If we can get a weekly hook and a cross, this daily is going to cycle. And how long does the daily take to cycle? About 2 to 5 weeks. Wow. So this thing could grunt and grind for the next few weeks to get down here? You betcha. First sign is we don't hold the breakout. We get sucked and pulled in the cloud and the daily cycles down. What's another convenient sign that the daily is definitely going to cycle down? High probability. We finally get the weekly to give us a hook and a cross. And what are we talking about, a hook and a cross? The PAI is starting to hook down, and all we need is this trend momentum to cross. Once we get the hook and the cross, what happened? It cycles down. What happened the last time we got a weekly hook and a cross, and this time over here, our dailies cycle down. It's awesome, and it's easy to see. So what happened? Daily cycle down. What happened? Daily cycle down. Huh. Interesting. So, are we going to get it? We start closing below this on the technical picture. Daily candle body closes below that. Likelihood we go down in there is very high. Likelihood this cycles down is very high. So is that the ABC proportionates for a reversal? And this is going to cycle down. We don't hold the support zone right around this magic Fibbo, which is also our Ichimoku cloud on this chart. Then we don't hold this. That means then we go lower low, and we break that low right there. In Houston, we come down here, we don't hold, and we actually break below there. The likelihood we go lower low becomes very high. Amen? And what happens if we go lower low? Then this can't be over. Can't be the end and we're ready to go breaking out, just like this time we broke it, and the time over there we broke below. So it just keeps grinding lower and lower. What is another reason? Not only the software and the technical picture about the proportions right now still thinks we could go lower low, but another big sign is from this weekly chart. We go back to this COVID low up to the high of 115, 114 and change. We got this correction, which remember almost 4 years ago, we talked about this. Hey, we're going to get a wave 2 correction, and it's going to last for years, and it's going to go a nice deep retracement. And so far we're reached to this zone, but from this COVID low, we actually took the 618 out. What is the rule? You have a low, you have a high, your retracement closes below the 618. Kind of chopped in this zone, we finally broke below and closed below. Once that happened, daily candle body, weekly candle body, we even have a monthly down in here because we've been down here for months, just chopping around lower before we get this little pop. So by closing below here, we have a 75% chance we could still go to 85. 70+% chance we could go to 82. Well, guess where 85 and 82 is located? On our bigger picture, that's exactly where we're looking for. Between that 87 and 80 zone, that's right dab in the middle of it. So by this maneuver, this technical picture, that low, that high, closing below that 618, says we got a great chance we could still go lower low. So when is this off the table? You get above the pink box. If this rally continues and get above the pink box, then we're offward off and running for a multi-year climb, stair-stepping higher and higher toward that 130, 140. Got it? What's the likelihood we go into 130, 140? In my humble opinion, and there's that target way up here. So my humble opinion that the likelihood we get up here, I'm 1,000% confident on a 100% scale. This is definitely where we're going. But do we still need to go lower low first before we get up there? Or is this already finished and we eventually break above the pink box? Then sure. What would I expect after that? Just kind of stair-stepping our way up there over the next year or so. Could take a few years. I don't think we're going to get above this pink box and rip up here in a matter of days, weeks, or even a month or two. I think it'll take longer to get up there. But typically, that's exactly where we're headed. So whether we go lower, all roads lead up there, or we're breaking out now, we go up there, or we go slightly lower low and not quite reach those targets, still going up here. So all roads lead to that 130, 140 target. But up until then, this is the target, whether we do go lower low. And as you stretch this out, I know you see nothing but line, but just look at the big pink box. As long as we're below it, more pressure to the downside. Why more pressure? That low, that high, we took the 618 right around that 98 and change, 98.80 area. You can clearly see we got a bunch of candles down in here. That's a close below, which sets we got to go lower low. So let's see how that plays out. That's why I'm saying if we're trading this to the upside, be in a position of authority. This could easily revert and go back lower. Or we get up here, could be a big move from that high down to the current low. Look where my 618 sit, right around that 107 change. So this could be a retracement to 107, fail, and still go lower low. That's why we can't just get into the pink box up here. We have to clear the hurdle to set the tone we're going higher, but all roads definitely lead that direction. Why is this important? Because wherever the dollar goes, a lot of asset classes you get insight on. And of course, you look at your Forex, and that's the euro dollar, pound dollar, etc. And why do we think there's a potential for this to go breaking out even higher on this as the potential for the dollar to break lower? The same rule. We had the high, we had the low. We broke the 618 right around that 112.80 over here. Said we had a 75% chance we're going to go visit this 127, 70 plus, basically that 131, 130.99. That's close enough. 131. Are we going to get up there before we go lower low? Or do we fizzle from where we are and break down? Well, remember we had a pink box on the dollar index saying if we break above it, then it was over. Well, here's your support box on the euro. We break below this, we're going lower low. Lower low to where? 0.8, 0.7. This is the low. Going lower low. Remember 4 years ago, I made a bold statement. Everybody else predicts. I predict this, the weatherman, this person, everybody's my prediction. Have you read my prediction? I predicted, I predicted, I predict. I'll leave that to the prophets. Well, I made a bold statement. I can anticipate with the best of them. That's why we call this software the Market Price Anticipator software. It anticipates, just like technical picture anticipates too. So is this, when we said this 4 years ago, I said, no buy, sell the whole recommendation. I can't tell you what to do, but this would be a good idea to consider going long the euro dollar because it's going to go up thousands of pips over the next several years in a correction. And we're still looking potential to go higher. Well, we broke that 618 over here, 75% chance. Then what did this one do? It actually broke the 786. So rule is you break the 618, you have those percentages, 75%, you go to the 1.148, 448, and then you have a 70% chance you go up to the 1272. I like those odds. But this one later actually closed above that 786. Now that reconfirmed we're likely still going up here. Well, just like I said with the dollar index, I'm 1,000% confident on 100% scare we're ultimately headed down here. But do we go up to those extensions first to then go down here? Or is this the end and we start breaking below this green support area? We're going lower low. All roads lead to lower low, certainly. But in this scenario, we broke that 78618 and the 786. So this still says we got some unfinished business to the upside. So what have we been doing with that information? Well, we buy the dips, up thousands of pips, have a little something left on the table. When is this off the table? We break below the green box, then it's gang ho to short this thing down here to this 0.8, 0.7 zone. Fair enough. What about the pound dollar? Kind of ditto. Same move. From this high to the low, this one took off quickly. And we actually broke above the 618 way back in 23. Said we got a 75% chance we're going to 147 and change. 70 plus, we're going to 152 and change. We're not there yet. But then we rallied toward the 786, got a pullback, and then what happened? All this you can't see it, is a bunch of lines here, but I can assure you can see the price action. We were above, and right now we're right at that zone right now. 133.78, 133 right there. We've been above it. And not only did we close above the 618 level, saying we got a 75% chance, but we reconfirmed by closing above the 786 zone, we're going up here. So is this a guarantee? Bet your life on it? 75% chance is still a high probability until it's not. When price proves otherwise, we break below that, we're going lower low. And what are we shooting for the pound? Lower low than this 103, which would set up a nice move down to 0.9 to 0.8. We're looking for lower low. Again, I'm 1,000% confident on a 100% scale. We're going lower low than that guy, setting up this target zone. The question is, do we need to get up here first before we break down? Or was this up here near that upper 130s, the end, and we're starting to break down now? I'm not convinced until price proves otherwise. This is still a higher probability we're going higher than we're going lower now. But once we take out the green box, no question we're going down here. Amen? All righty. What about the euro yen, pound yen scenario? Still been warning you about this. Any rally should be sold. This does not look like it's ready to continue this big move, that it's likely going to get a correction and go deeper. This overlapping chopping action still looks better if we get down here. It's been a chop and a grind. All eyes are on the U.S. Are they going to raise rates? They're going to cut rates? What are they going to do? Well, this technical picture says we still need a lower low before we can really clean this picture up. And looking at these pairs like the euro yen, pound yen, the monthly's overbought, weekly's overbought, daily, and we're just kind of chopping and grinding in overbought territory, which kind of sets the technical picture. Not only do we need to go lower low, but the software kind of says we need to go lower low because we're all overbought. That's more probable. So any of these rallies, I've said be careful, look for this to go lower. And even on this one the other week, we made over 500 pips just on that pullback in one day. And now we've been chopping sideways, overlapping, which still looks like we need to clean this up by going lower low. And I'll remind you about the pound as well. I don't predict things, I anticipate. But that same thing, 4 years ago, I made a bold statement. Hey, you might consider going long the pound dollar because we're going to go up thousands of pips over the next several years. And if we make this run toward this target up here, we still have another 1,400 to get to this target. And you add another 5,000 to that, you're talking almost 2,000 to get up here now from 133 to 153. That'd be 2,000 pips more. And we went from this 1.03 up to 133. That's 3,000 pips. So talking about in a prediction, I don't need to predict it. I anticipated it, but that's 3,000 plus pips already. And if you're ebb and flow in this in multiple lots, those 3,000 pips can tally tens of thousands of pip as we get in, take some profits, add to your position, however you played this. But we've been talking about this for several years now. Is this correction over? I mean, it's possible. We're at a lower high. I'm not saying it's no way it could be that. Remember, all roads lead down here. We're at a lower high at the moment, but the technical picture still has a greater percentage. We need to go up there first. And when is this off the table up here? We break below the green box. It's over. And this would be off the table. Boom. Forget that. But up as long as we're above this, the probability we grind up here is still greater. So as we get these oversold conditions, I like to buy and take some profits and continue the process. Pound yen, we just talked about a minute ago. If you look at the pound yen and you go back to this COVID low over here, talk about a brilliant move here. I made a bold statement way back here. And I said, based on price action, based on the scenario, we're due to go on about a 10,000 pip run, 8 to 10,000 pips. It's going to take multiple years for us to get up there. It's in our archives, not after the fact. When it was down here, I made that statement, hey, you might want to consider going long the pound yen because this technical picture says we need to go back to this high and make a new high. Not bad. 8 to 10,000 pips. And since then, we've had some trouble. We had that carry trade unwind. That was in this area, 2,800 pip drop very quickly in a matter of a few weeks. We dropped down. And this is the run that we said we'd go. And then this big move down looks impulsive. This still looks like a big A. All of this chop and overlap, even though we did go higher high, clearly see that, it'd still be a B. And we come down here in a C. Because this chopping and overlapping after a very impulsive move down, this looks corrective still. And this looks like we still need to get a lower low to fix that. Well, after that run up, what's happened? Now you zoom in after that last run up and look at what it's showing again. This is that run up. And we got this scenario. We talked about this chop and grind. And then from the recent high to low, we said we break that 618. We finally did it. Where would we go? 216, 217. From last week or so, I warned you about that. Hey, we closed above that 618. Where we're going? 216, 217. Where did we go? 216, 217. Huh. Interesting. How do you know this? That's the Fibonacci power. That's the MPA PE5 version 5.0 and the use of our tools that gives you these high probability targets. Now what? I would not be going long right here. It's time to take profits and look for a potential pullback because this chopping and overlapping still needs corrective action. And it's rinsing and repeating that we still likely need another lower low. Too much overlap and chop, even though it did reach the extension. That's the beauty of this. Now what? Likely going lower low. So if you're long this, I'd definitely be taking profits. We reached the targets. What happens after you reach your target? we typically get a pullback. Pullback to where? Where we broke out from, or maybe we get something much deeper and we get that bigger degree we talked about a moment ago. If this is still that bigger ABC, then we got thousands of pips to get down here. And when the software, monthly's overbought, weekly's overbought, daily's overbought, what happens? Look out. Could be going lower low. First things first, get into your position of authority. So what have we been doing? We get to position of authority, take your profits. Then this thing broke out, and I keep saying, sell the rally, sell the rally, sell the rally, as this thing is due for a big downside. What do we know about the pound yen and its history? Whenever we get a market crash, this thing tumbles. Back in the dot-com bubble burst, 9,000 plus pips. 2007 financial crisis, 13,500 pips. What's the next one? It is going to be called the Elizabeth, I'm coming to join you, honey. Is it this year? Probably not. Is it next year? Better chance next year than this year. But we're on the cusp of another financial crisis. We're hugely in debt. We got all this AI expenditure. We got $5 trillion plus in commercial real estate debt. That bubble can burst. It could be maybe another war somewhere. You never know what's going to be the reason. That's why I call Elizabeth, I'm coming to join you, honey, in honor of Fred G. Sanford and Son. And Red Fox would do that. Elizabeth, I'm coming to join you, honey. Here comes the big one. Here comes the big one. Well, it's inevitable. We're going to get another financial crisis. And when it does, this thing's going to go tumbling. We can learn from past history. And I'm expecting to be another doozy. Just a matter of when does it start. So we can start this correction and get down to 180 if we do that correction we're talking about. And then a financial crisis kind of hits in next year. And we can go, man, we can go way lower. I mean, look at this pound yen. Does this look like something you want to be long, expecting this thing's going to all-time highs and breaking out, dude? Yeah, this is your correction. We're ready to go breaking out. We're going to the stratosphere. This thing has been making lower highs and lower lows, so guess what? We're going to get another lower high over here and likely going to get another lower low. Huh. I digress, but you get the point. Now, let's jump into the markets. What about the markets? Down goes Frazier. We're looking for that correction. Let me start with the daily. SPX. We're still at a lower high. This is a problem, Houston. Houston, we have a problem. That this is setting up a potential big move down. Mr. Tucson, is this the beginning of a 1-2? 1-2. Ooh, 1-2, 1-2. That could set up a gnarly move lower, at least toward the daily magic fibbo. Wow, pretty good. 400 plus points. That thing can go tumbling down. If this truly is a 1-2, 1-2, then we need a 3, 4, 5, which would be a 3, 4, 5. This thing could go much lower. And as we've been talking about the fall in the fall for months now, what would that look like? We might even get a visit down here at the Magic Fibbo on a weekly chart. Oh. So could punch junk euphoria continue and we just continue higher? Yeah, anything's possible. But even Morgan Stanley, I don't know if y'all know Morgan Stanley, I'm sure you heard of it, but Michael Wilson issued a formal rotation call. Get out of the chips. You need to get out of chip stocks like NVIDIA, AMD, and Intel and move into things like the hyperscalers, Microsoft, Amazon, Meta, and Google. Well, our Magnificent Seven's been struggling so far this year, even though NASDAQ has been grinding up. S&P's been grinding up. There's some things under the water there. There's a lot of things going on that are setting up, and this technical picture sets up a lower low. Not only the SPX, but NASDAQ's even worse. When you start looking at this on a daily chart, this is screaming. Let me zoom that up, stretch that out. I'll even get a little bit bigger. You can focus on this recent price action. But Mr. Tucson, look at it. It's doing the same type of thing. We got this 1, 2, 1, 2. You say, well, wait, no. That made a higher high. It did not. That's the contract rollover. I've been showing you this for days now. When you go to the recent contract, whether I look at June, which is now expired, of course, so I'll go to the current contract of September. Now look at that picture. Much different. 1, 2, 1, 2, setting up a big kerplunky coming. So by all means, this thing looks like it needs to sell off. And a likely target initially is going to be this magic fibbo. So any rallies, what I've been telling you for weeks now, after we saw this initial move, I said the same thing. Any rally should be sold because this chopping and overlapping, we need a correction lower. Remember that run up was impressive. We talked about buying this in April, that we were due to rally. I didn't expect quite that much, but we were due to rally as we went into May, June, maybe July. And then we're looking for the fall in the fall. Well, let's go back several months ago. And you don't really see it on this contract here because all the dots and stuff. But we were talking about this. We had this October high, and then we went down. We got a lower low, lower high. We never broke out. And we said the same thing. With all this chopping and overlapping, we need a lower low before we can go breaking all-time highs. Did that work out for us? Woo-hoo! Did it. And yes, look at that. Well, this run has been insane. Now this is a nested 1, 2, 1, 2. This is going to get ugly. Down pretty good today, but I warned you going into last week. Said the same thing. Any rally should be sold. Any rally should be sold because we're still at these lower highs. And that's why when you look at just this in Q1, which is automatic contract rollover, it looked like we made a higher high, but we did not. Amen? All righty. So SPX, same thing. We're at lower highs. This is not quite as bearish looking as the NASDAQ, but it's bearish looking. Lower highs until we break above that. Then we could potentially go all-time highs, but this still looks like it wants to go down and visit the daily magic fibbo, kind of clean that up. We'll look at the index for NQ. And what is that? It's not the contract, it's the index, but we're still at lower high. And is this the nested 1, 2, 1, 2? This thing gets very ugly very fast. This thing, not only a big down day, but this thing can really get ugly very quickly and push us down another 2,000 points or so. Look at these levels. When you use your 3-point tool, just on this last little push, recent high, down to the low, down to the lower high, that puts us in a 1, 2, 3. That puts us down here about 27.5. Remember when you look at ABC versus 1, 2, 3s, you typically in a 1, 2, 3, you get pushed toward the 1.618 level, where if it's an ABC, we would stop somewhere between this zero line where the 28.5 to 28,000 range to reverse. Well, if this is a nested 1, 2, 1, 2, then this push down here should get us somewhere around a 21.5. That would be wave 3. Wave 4 would not go into the area of wave 1. and we'd even go lower low. But if that's the 1, 2, 1, 2, then this would be the 1, 2, 3 for that. Still push up here and not go into the area of that wave one and push us even lower. And this thing could set up not only reaching the daily magic fibbo, but this thing could get very ugly very quickly and even push us down here to the weekly magic fibbo. Last time I had these warning calls was way over here, and we went all the way down to the weekly magic fibbo. Remember that? So could we get a repeat performance of that? Absolutely. So first things first, any rally should still be sold. Is it possible this low, that high, we bounce and go breaking out? I'm not going to say it's impossible, no. But this technical picture, as long as we have these lower highs, that was a terrible move. As long as we have those lower highs, lower low is in the picture. My first targets on the lower low is at 2830, 28,000, which is still about 1,700 to 1,000 points. But if this is a 1, 2, 1, 2 type of scenario, then this decline should stair step its way down toward this 27.5 or lower, not just stop here. Got it? So this is setting up for a big push in a daily magic fibbo visit. And then you look at that run since April. We expected a nice bounce. We got the lower low we were looking for. Remember this? Got that October high. We got the lower high. We said we got to get a lower low. And this is still at a lower high. Doesn't look like it, but it is. And we ultimately went lower low. Well, now we're doing the same type of thing up here after a massive run up. So what happens if we get this retracement? Likely we're coming down here. It sets the tone. Check this out. You get your low. You got your high. Look where that 618 zone is located, right around this magic fibbo area. So here's the 618. There's my 786 zone. So if we come down to magic fibbo and we don't hold the 618 zone, we go lower low. And guess who's sitting down here at these extensions lower low? Anybody want to guess? Who's sitting right in this zone? Who's sitting in that zone? Weekly magic fibbo. Say it. Can't make this stuff up. So, are we going to get the fall in the fall? I'd like to see it, because if we get the fall in the fall, like the last time we visited that weekly magic fibbo, in this most recent correction there, talk about salivate country, right, Mr. Tucson, Harold? We get the fall in the fall, and what happens when we're sitting down here in the fall? Salivate for this thing to go blasting off year-end Santa Claus rally and into next year, maybe first quarter, second quarter, first quarter, somewhere around there. This thing should go stratospheric. What else do I like about getting down here? Well, if you look at this low up to that high, and I'm going to take a lot of these lines off, because I know you think, well, Gary, I can't, all I see is colored lines everywhere. How do you even function with that? That's because I do this day in and day out. I've been doing it for decades. Technical analysis. I have a God-given talent to read and interpret price on a chart. And you look at all this, let's just remove it all. Now you can see price action. Well, now I can see, right now? Well, if I use my 2.2 and I come up here and I do that retracement, got that low, got that high. Look where that 618 is lining up, right at that weekly magic fibbo. Woohoo! Isn't that exciting? So if that's a 1, 2, 1, 2, we start to play this thing out. We get down to the weekly magic fibbo sometime, and you can look at the dates over here, out into the fall. So we're pushing toward it. We got July, August, September, October. So I can't give an exact timeline, but somewhere in the fall, we're down here. I'm going to salivate to buy that for the potential upside. And now, what is the upside if this thing holds and we get what we call a 618 retracement slash combo magic fibbo bounce? The combo meal. Where does that put us? It puts us in the stratosphere up here, pushing the 40,000 even above. So how do I know that? Use your 3-point tool. You have a low, you have a high, you have this higher low. You come back and test that 618 magic fibbo level. You get the combo meal. And minimum, you would look for this 36 to 39 level. And if it turns out it is this 618 magic combo bounce, it typically pushes toward that 1618, which is just under 45,000. Woo! That's what I'm calling stratospheric. So if this is our target zone, and I'll move it over this way a little bit more. So this is the target zone. I'll bring it in a little bit more. That's your target zone. If what? If this thing comes down here into the fall, we get the low, we get the high, we get that 618 retracement slash combo bounce, then it sets the tone. We're going up into that zone. Thousands of pips later. Well, look at the potential. We can get down here in the mid to low 20s. We're at 29, but we're talking like 22 area. See where it is? 22 right there. And the 618 is down in 19 and change. So this 20 to 22 area, we potentially could double going into that extension. That's some stratospheric numbers. But I've been warning you, we still need the correction. Just like I warned you, we needed that correction. I'm warning you, we need that correction again. And if the thing turns out we do get this fall in the fall, and we come down here September, October range, that sets the tone for a year-end rally into next year, Santa Claus rally, etc., of some major, major upside. And this could fit the perfect blow-off top, setting the tone next year into Elizabeth, I'm coming to join you, honey. Regardless, Carol, let's just say, what if, William Bruce, right there. We get the fall in the fall. We go blasting off into the stratosphere into next year. We're going to get a massive correction thereafter. No matter what. And if it turns in Elizabeth, I'm coming to join you, honey, this thing's going to get really ugly. And we're talking when Elizabeth, I'm coming to join you, honey, does come into play. We're looking for a visit of this monthly magic fibbo. We haven't visited that monthly magic fibbo, you can see, in a very long time. We're overdue for that. So imagine we get the fall in the fall, we go blasting off into the stratosphere, and then we get our Elizabeth, I'm coming to join you, honey. From the 40,000s down to 13-ish. Ouch. That is some massive downside. That's on the cards. We're going to eventually get it, whether we can get all the way up here or not. We're going to get the next financial crisis, and it is going to be ugly. And I suspect we're going to come visit the magic fibbo on a monthly chart. So, can we get the fall in the fall where we visit the magic fibbo on a weekly chart and set up the combo bounce, the 618 slash magic fibbo bounce combo meal to get something like that? All I can say is, what if it happens and we get up here? I'm going to salivate to short the daylights out of this thing. Amen? In the short term, what are we looking at? If this is a nested 1-2-1-2, this acceleration to the downside should start playing out. It can happen very quickly, or it can take a few months. Remember, we're talking about getting down to that weekly, potentially weekly magic fibbo down in here by September, October. We have months. This thing could take weeks to get down here and a few months to get down here. I don't think you should short this every day. Of course not. But the bigger picture says we need a correction, especially after that run up. So what happened? We started breaking this low. Where are we going? We're going to Magic Fibbo on a daily chart. We don't hold the daily Magic Fibbo. Then what do we have? This is why I have so many lines on the chart. You take that low, and remember the little tool, you can hold your control key, which does this little magnet, and then you get at the bottom of that candle, and you get at the top of that candle, and then you see where the 618 zone is. So I'm going to put a little color box in here. So this is a support zone, 618786 zone, because we're above it. That's why it'll be support. And you go and change this to green. So Harold, what happens if we don't hold the Magic Fibbo? We're going to test this box. What happens if we don't hold that? We go lower low. And where's lower low? Weekly Magic Fibbo. Beautiful. See it? So I would not be going long. I'd be taking aggressive profits if you ever try to, that's what I've been saying for weeks now, right? Any rally should be sold. Any rally should be sold. This thing is screaming. We need to visit at least the daily Magic Fibbo. We don't hold that, then we go to the 618. We don't hold that, then we go to extensions to the downside, right? Remember, low, high, you close below the 618 zone. We got a 75% chance we're going to visit that 1.448, 70% plus chance we go to visit the 1272. And if we go visit this extensions down here, who's sitting there? Weekly Magic Fibbo. Beauty. All righty. So what else do we have going for it? Check out the software on the Nikkei. What's that got to do with anything? Nikkei is my proxy for global liquidity. And my daily is pushing lower. We're not finished the cycle. The global liquidity is screaming we're going to cycle down over the next several days, which again, a daily cycle takes about 2 to 5 weeks. We've been doing it for a week or so. You count those days in there. So the likelihood we're going to get sucked and pulled down toward the Magic Fibbo / Ichimoku cloud is very high. Why is that? Because I said so. Do you need anything more? No. You look at the weekly, and lo and behold, Harold, what do we have on that weekly? We have a PAI hook. We got a trend momentum cross. And what happens when you get a weekly hook and a weekly cross, like we did over there? Weekly hook, weekly cross, weekly hook, weekly cross. What happens when a weekly hooks and crosses? The daily cycles down. Huh. What happens when you get a weekly hook and a cross? The daily cycles down. So what's it going to do now? The daily's going to cycle down. Whew. Bingo. And what happens when global liquidity loses another few thousands of liquidity? It's going to pull our markets down. Our markets are setting up with the nested 1-2-1-2 look, which says we're likely going lower low. And even global liquidity has the weekly hook and a cross, which means the likelihood over the next few weeks, we're going to get the daily to cycle down, which means we're going to get sucked and pulled into the cloud, pushing it toward its potentially down here to Magic Fibbo. Go over here to the charting platform. Same type of move we're seeing for this to go lower. Global liquidity goes lower, it's going to pull our markets lower. Kind of fits. Right? Here's the Nikkei. It's setting up for another push lower. Do we get to the daily Magic Fibbo? What happens if we get the same type of thing off a weekly chart? From that low to that high, look, we're almost toward that 618 where the magic Fibbo's sitting. This thing's sloping upward. So is it possible over the next few months we get the fall on global liquidity and set up another big stratospheric type of move on the Nikkei? Well, that would fit. We get the same type of move and we get a stratospheric move on global liquidity, and then our market should do that stratospheric type move. Now, I'm not trying to tell you, look out, 67,000, we're definitely going to 45. So we're going to get a $20,000+ drop on the Nikkei, but we don't have to get all the way down here necessarily for our markets to pull that weekly magic Fibbo. But it's interesting how from the recent lows to highs, they're all setting up the same way. So there's the Nikkei potentially setting up that way. Do the same with ES. Low, high, get that same type of move on a weekly. Would be right around that 618 retracement zone. NASDAQ, same thing, right around that 618 retracement zone. Check out the Dow. It too gets the same type of move near that 618, right around the same zone. So all of these potentially could be setting up the same way. So in closing, what is the projected path for ES? It's not as clear as what the NASDAQ is, but it's still looking gnarly. We have a series of lower highs. And if this is a 1, 2, 1, 2, then it sets the tone. We're at least going to go visit the daily magic Fibbo. We don't hold that, then we got the 618 area. We don't hold that, then we go lower low, which sets us up exactly where the weekly magic Fibbo is sitting. So is this going to be the fall in the fall we anticipated months and months and months ago? We shall see. Any questions? So in closing, I would not be gung-ho on buying long in this environment. Not saying short everything under the sun, of course not, but the look of this overlapping nested view looks like we need to go lower low. And the numbers fit, Harold. Watch this out. How cool this is. You go back to the recent move. We got two of them, right? We got that high, that low, this lower high. Where's the numbers come in? So I'm going to run it twice, and you're going to have a lot of lines on here. So we have that high, that low, and you can see we kind of stretched the limit up here. Remember, this looks like it went toward a new high, but it didn't, because that's the contract I showed you a moment ago. But just ignore that. But that's a lower high, and we got another one. But use the 3-point tool on this. 3-point tool. That high, this low, and again, it is a true lower high, would be over here. Look where those line up. Then we do it again, 3-point tool. That high, this low, that lower high. They setting up. Nested view for this thing to come and at least visit this daily magic Fibbo. Interesting. So to make it look more concise, you can use SPX, for example. And we have the high, the low, the lower high, and then we got another lower high. And that's what I'm calling the nested view. 1, 2, 1, 2. And in order to get down here, let's just run those again so you can see what we're talking about. From just this most recent view, that high to this low, where did we stop in the area? Right in this one isn't as clear as NASDAQ. I'll show you in a moment. Not quite as clear, but it's still showing the same picture. As long as we're at lower highs, the likelihood we go lower low is very high. So far, so good. And look at what happens when you use the 3-point tool on here. That high, that low, this lower high. And if this is a 1-2, right? 1-2, we should at least go toward the 1618. Wow. Look at where that's sitting. Can't make that stuff up. And if this is the 3, we at least do a 1618. Then we get a wave 4 correction. We don't go into that area. Lower high, lower low. And if this is the other 1-2-1-2, then all of this move would be the bigger degree. This would be the 1. That's the 2. This would be the 3. Then we go wave 4. We can't go into that level. And we still go lower low. And guess who's sitting down there? Weekly Magic Fibbo. Look at those extensions. Can't make that up. So the technical picture is screaming we'll likely potentially have a fall in the fall. And again, we're talking months. We still have July, August, September, October. We could push this toward 3 to 4 months. So I'm not trying to tell you this thing is going to go crumbling. Just like we had this run up, we're going to have a duplicate of that in the next few weeks, and we're going to be down here. Well, could take a little bit longer than a few more weeks, but a few months, yeah, that could be potentially setting up. NASDAQ is worse because when you look at it and you go back to the daily, this thing really set up for the perfect down move. Not only do you see the nested 1-2-1-2, but you start looking at what this chart's showing us. Recent high to low. Where did we stop? Right in the 786, 618 zone. Boom. That's the first one. And then you look at this one. From this recent high to that low. Stop right at the 618, 786 zone. Lower low. Amen? So does this mean it's just going to keep going higher and higher and higher? It's kind of bouncing off this zone. Now, take some profits. You're up 600 plus points in a day. Take some profits. But the biggest picture says we should at least go visit the daily Magic Fibbo. So again, we're at a series of lower highs. That means we got to go lower low. Lower low than what? Than this guy over here. Who's sitting down there? Daily Magic Fibbo. Why is this target here? That recent high to low, lower high, the extensions are down here. They fit perfectly. Any questions? So, use a 3-point tool. You got the high. That high, you got the high, we got the low, we got the lower high. Look where that 1618 is sitting. So again, if that's the 1-2 and we're going down in 3, we typically have to go at least toward the 1618 or further. And who's sitting there? Daily Magic Fibbo. So what am I trying to tell you? No buy, sell the whole recommendations. Any rally should be sold because we're likely going to visit at least the daily Magic Fibbo. We don't hold that, then we got our 618 retracement off of that bigger move. We don't hold that, then we go lower low. And who's sitting at lower low? Weekly Magic Fibbo. Beautiful. Only one that is different right now, I still think's got the chance, is the Russell. Still think Russell's going to likely go visit that 131. It's kind of holding consolidation pattern after breaking out. We just missed the 31 up here by not too much. Let's see, that swing point high went to 3068. So we missed it by a handful of points. But maybe we still need to go up there and touch it. You start to drill down. And we kind of have this trend, still holding a trend channel, higher lows, higher highs, and we're trending upwards. So be careful with this one. We might get one more last little pop up here toward 31 and then set up the much bigger correction. Fair enough. So most people trade this by IWM. Kind of said we'd push toward that 303 to 305 area, and we topped out at 302.72 so far. I would not be shocked to see this thing get one more push before the bigger correction. Fair enough. So that's what we see on this bigger picture. We're due for a much bigger correction. Are we going to get something like that on this one? From the recent low up to the high, which needs to be slightly adjusted to right there. Can we get a 618 type of retracement going into the fall? And then get a stratospheric type of move year end going into next year? Maybe. But be very careful. This 3100, which is that 30, I kind of said 300 to 305 zone, was where we expected we'd probably top and reverse from. We're already there, but maybe we get one last low pop. All I can say is, Harold, what if IWM pops up there and we get to that 305 area? Look for this thing to correct down. Or Russell gets that last little pop up to 3100, look for the bigger correction. And it may be setting up the fall in the fall for this one as well. How's that sound? Let's continue. What about black gold Texas T? Be careful. We're due for a bit of a bounce here. We're kind of oversold. We're kind of grinding lower, as we had talked about, to visit this breakdown. So from March 9th to March 10th, we got this big wide open gap. We watch this move, but we're right in the cusp of a reversal zone. So how do I look at that? I can stretch this out. I use my 3-point tool, and we have that high to this low, and I'll use my control key so we can lock these in right, to this lower high. Look where the reversal zone is. We reached extension where if that's A, that's B, and our C, where A equals C, we already reached that. We extended a little bit toward this 1448, 1272 zone. So how is it possible we could grind a little bit lower and kind of back test that 2022 lower high trend line and bounce off of that? We're just scraping by that consolidation zone before we broke out. So we kind of said this is where we're headed. I think the easy money is pretty much made on the short side of black gold at this point, and we're due for a little bit of a bounce here. Why? Because we're reaching this control battle zone area, and it would look even a little bit better if we get one more little push down in here, but we don't have to get that. We are starting to depressurize. Maybe we go up to the magic fib, it's starting to turn down, and then we get a push lower. But this thing is setting up. Either we're going to bounce off of here to potentially go much higher, or we're going to ultimately break down to go much lower. We're on the cusp of either reversal up or, a little bounce and then another push lower. What's going to happen? Well, the easy money, I think, is made, so I would not be shorting this thing real heavily right now. And when you go over here to the software, looking at black gold Texas T, you can see why. WTI. Here we go. Right there. Daily's oversold, starting to turn up. We got a daily hooking across. My 4-hour is cycling up. Come on. There we go. Cycling up, not quite finished, get sucked and pulled in the cloud. So we have a lot of tools with the MPA software. The key is behind the hook and the cross strategy. And when you get a daily hook and a cross, what happens? The 4-hour cycle. What about where Ichimoku comes in? When we know a 4-hour is going to cycle, then we know price is going to get sucked and pulled into the cloud. Or you know a cycle down, you're going to get sucked and pulled into the cloud on a down cycle, right? So that's just kind of a target as a visual aid of where the targets are lying. Could this thing pop up here to the magic fibbo? You betcha. As the 4-hour cycle. Well, after that sell-off, not only is the 4-hour needing to depressurize, my daily's oversold starting to depressurize, and even the weekly is in oversold territory. It's not quite finished. It's very close. Look at that. So how this is setting up where we could potentially let the daily go up, slingshot lower, weekly continue to push down, and we get that retracement we're talking about. Since 2022, we got that lower high trend line over here. We come back and retest that, and then all of a sudden we get a big weekly pop. So I think the easy money has been made. Yes, we could get a little something more, Mr. Tucson, maybe a little rally, another little push, but then we're going to have a daily oversold, a weekly oversold, looking for a bounce. And that could potentially set up, especially if we don't go breaking that lower low, skyrocket to 150. What? Yeah. So be awfully careful with this. Back over here. Are we going to get the push to a lower low? Or are we going to get this backside trend line test and still go higher high? That's why I think we're probably going to get a little rally and a push lower, get that weekly oversold, retest this zone. We're already kind of on the edges of it. So this is the zone I was looking for initially, right? And this here. Let me just draw it with this guy so I can remove it real fast. I'll do it with this one. So take that off and let me use my mark slot. So from that prior zone, this is the back test of that downtrend to highs, lower highs. We're at the consolidation zone right now. We could go bouncing from here potentially, or more likely we'll probably get a lower high, lower low to go into this area. Then we get that weekly to turn up. So I'm looking for a nice little bounce come in here, especially once that weekly's oversold and starts bouncing. Could it potentially turn into a push toward that 130, 150 zone? You betcha. All we need is a no deal. We think we have a deal, and then all of a sudden we have no deal. This thing can go ripping up into there. But if not, and we don't hold this back trend line area, so between that low 60s to upper 50s, we don't hold that, then it sets the tone we're going lower low, push down in the 40s, maybe even into the 30s. Fair enough? So what's going to happen? This rally, I don't think it could turn into something really ugly, but I think this is going to rally a little bit and then sell off again. Give us that push into the low 60s, maybe upper 50s. Then we potentially could bounce with that weekly and turn into something really ugly. Or we don't hold it, the weekly turns up, slingshots lower, and we start breaking below this zone. We're going lower low, pushing us into the 40s, maybe even into the 30s. Got it? What happens if we get down in the 40s or 30s? I'm buying. Because drill baby drill cannot operate down in here. They need price to be right around where we are, that 65-ish level, to make profit on drilling. So it's kind of like the return to the mean. Anytime you're way out of whack, oil price is going to come down to reality. Anytime you're way below, it's going to drift back to where it needs to be for the drill. They can't operate down here, can't survive down here. It has to be in the mid 60s to start to be profitable. Anything much higher than about 90, inflation hits, which is not good for the drillers themselves, meaning their workforce, etc. Cost of living, everything goes higher. So that's why it kind of returns to the mean in the 60, 70 range, kind of where we've been hitting now. So be careful on this bounce. I don't think this is, unless we get rockets flying and no deal, we can go up here. But this is likely going to make a lower high, lower low. This is the zone I'm watching. That prior little consolidation zone to the backside of that 2022 back trend line right there, that lower high trend line. This is a high zone where I think we're ultimately going. We reached the cusp of that consolidation zone, but I think this will turn into a lower high, lower low, get that weekly to finish the cycle. Then what? Set up a big bounce toward the upside. Remember, you do have the option of using this software in NinjaTrader, and we're watching Meta. Meta is one of my favorite things that is going to potentially turn into a massive run up here in the stratosphere of 12 to 1300 is the zone. That on this extension right here, that 1300, 1200 zone is the sweet spot up here. Are we, what's the Morgan Stanley, Michael Wilson saying, get out of chips? The rotation is into the hyperscalers like Microsoft, Amazon, Meta, Google. Now, this isn't, you better buy today because it's going to be up here at 1200 tomorrow. No, probably take a few years, a year or so to get up here, but that's still the plan. So I have some METU. What happens if we get the fall in the fall and these guys take a little brunt of it too, and we actually go slightly lower low? My METU shares that have bounced nightly so far, what if it goes lower low? I'm going to add more. I'm holding some METU shares, which is leveraged product, for this thing to go soaring in the next few years. That's why I'm buying shares and not worrying about options, whether they expire or not. And the plan is this thing to go breaking out into the stratosphere as Meta makes its run toward that 1200 to 1300 zone up there. I kind of said 1100 to 1300, but there you have it. 1200 is right in the middle. 1100, 1300. This is the target zone up here. And that's where we think we're headed over the next probably year or so. This is my target zone. And even if we get the fall in the fall or reset parameters, take a little bit longer to climb up there. But that's kind of the plan for us to get up there. All right. All righty. So let's finish up. Any last questions on black gold? This rally should fizzle, probably still go lower low and test the backside of that 2022 trend line. And once we get there, we either going to break below that, we're going much lower into the 40s, maybe even 30s. All I can say again, Harold, what if we do get this little bounce, we come down here, we do break down? I'm going to look to buy when we're down in these lows, because drill baby drill can't function down there, and it would need to get back into the mid 60s, 60 plus. 65 is kind of the threshold where they can start making profit again. I would expect price to bounce back in that zone very quickly. And I don't mean overnight or a day or two, but it would retrace back into that. And Even if we don't, this still has the potential for no deal to push us up in that 120 to 150 zone. Could get real gnarly very fast if there's no deal. All right. All righty. What about gold? Still would look prettier, my friends, if we get that final flush. Give me that final flush down in here. Kind of just grinding one more flush, maybe into that, break 39, get in that 38 range, maybe to 37. Is this going to be the final flush? It would look better. And we get that. We talked about it. We needed a new low. Even at that low, I said we still need a new low. This is still kind of chopping and overlapping. One more low into that 38 would be beautiful. If you already started nibbling, because we did say once we break below that 4,000, that would be a time when you could nibble. We did that. We bounced. We still went lower low. So what did I say? Harold kind of walked you through that process. What if I buy down here? It's going to rally and then we end up lower low. Don't panic. Just add. Buy some more. Dollar cost average. And we bounce and we still go lower low. Add some more. What if we get another bounce and we even go lower low and we do something crazy where we get down here in the mid 3,000s? Back the truck up. Because where's gold going? 7 to 10,000. My humble opinion, gold is going to 7 to 10,000. No ifs, no buts, no ands. We're going up there. I'm 1,000% confident on 100% scale. That is where we're headed. Could take a year or so to get up there. I'm not trying to say, well, once we get that final dip, this thing's going to rip to 7 to 10,000 in a matter of months. I mean, anything's possible. Remember the gold trade when that train was running? I warned you, look out. We need that correction. We got it. You go back in the decades I've been doing this, and I'll go out to a weekly chart. But when gold hit this 1900 over here, way back in the early, well over 10 plus years ago, what happened there? We needed to go from this high. I said, gold needs to get down to 1,000, and it dipped into the 1,000. When you look at the actual numbers down here, it dipped below into the 1,000 before it would make a run to 3,000 to 5,000. Kind of made a statement back then, not a prediction, that we get to 1,000, gold's going to make a run to 3,000 to 5,000. Took some years to get up there. So what's the new one? The new one is we need to get below 4,000. We got it. We're bouncing a little bit. It still would be prettier and better if we can get that last little flush. So I'm zooming it in so everybody can see current price action. This would be nicer if we can get one more flush down in the 38s or lower. All I can say is you nibble there. We get that another flush, nibble some more. We get one more flush. If we can get down here into the mid 3,000, 3,400, who's sitting there? Our weekly magic Fibbo. We get anywhere in that 34 to 3,200 range. These black numbers represent this orange line, which is our magic Fibbo. Also a part of the Market Price Anticipator software. We get down here. This is get on your knees and thank the good Lord above, because this thing is going to go exploding over the next year plus and work its way to 7 to 10. So if we can get down here, Harold, we're talking minimum a double. Minimum. I like it. So do we get the final push? Don't worry. I have no problem nibbling where we talked about, but the lower we go, the more I add to my position, and I don't panic. What happens if I buy more at 3,800, it pops again and then drops down to this 35 area, 34. Back the truck up. Again, no buy, sell the whole. I can't tell you what to do, but man, this thing is begging for a double, if not a triple, to push these limits. Definitely going up here. Question is, do we need one more little push down in here? The lower we go, the more I salivate to buy that big bounce. And there's many ways to play it. And buy gold bars at Costco. You can buy, ETFs. Many ways to do that as well. And even some of those gold miners, when we make that run, you remember our move on Newmont? That was a thing of beauty when we bought that and we had that massive run up. Man, we go back and we talked about when it was down here at 30 bucks. I said, let's do something crazy, right, Emil? Let's buy 60 call options way out of the money. Push them out and let's see what happens. Bought it less than $1, or right around $1, and sold her about $8. Not too shabby. Then we still got the second run on this thing after that initial run. And then we got the pullback. This went from $1 to $8. And then the second run did even a little bit better than that. But that set the tone. So is this the one to play, or do we have some other one we can play? Sure, there are other ones. But I would love to see this baby come back toward this weekly magic Fibbo. We can get Newmont back in the 70s. I'm very interested. Not to say we're definitely going to get there, but Newmont gets back in the 70s. I'm interested because this next run to 7 to 10,000 for the underlying, this thing could go stratospheric into the 200s. Maybe something crazy into the 300s. We shall see. I digress, but I think you get the point. So back to the underlying, gold is likely still needing one more push, in my humble opinion. It would look a lot better if we can get it. Are we definitely going to get a weekly magic Fibbo visit? Man, all I can say is if we get that low, back it up. Because that would be a double minimum, triple likely if we can get down here in the mid 3000s. All right, that'd be a better picture, better look. Silver, still the same thing. We kind of bounced a little bit here. I warned you on this. We still need a lower low. I still would love to see silver do it. Come on. We're right around the mid 40s. 44, 47, if we could sell off one more time. If you already started nibbling on silver, don't panic. Still think silver's going to 150 to 200. So no problem buying it at these levels right now. And even as we dip down in here, got that lower low. What happens if we make another lower high, lower low? Salivate country, we get near the mid 40s. Whoa, dude, we get to the mid 40s. That's back to truck up zone. Because imagine if we make a run toward 150 and we're down here in the 40s, or even say 50. Say we hit 50. It's a triple to get to the bottom end of the bubble. It's a quadruple to get to the top of the bubble. Wow. So is that going to play out? You betcha. I'm 1,000% confident on 100% scale. We're going up there, 150 to 200 zone. Do we get that last flush? The more we flush, the more I buy. And again, many ways you can buy a silver bar at Costco. You can buy some ETFs. Many ways to play it, but just be a part of it, because I don't think we're going to do this where we get down here and all of a sudden we're up here at 150, 200 a couple of weeks later, a couple of months later. I think it'll be a few years typically. But when it gets started, this thing really goes, right? And I would expect some stair stepping in here, but probably a year or so. That's why I want to buy shares or whatever I do and just not worry about timing and just let it do its thing. All righty. Sound good? Let's continue. Bitcoin. Mr. Bitcoin. Getting a little bit of a bounce here. Not expecting this to do too much. We're still grinding lower lows, lower highs, lower lows. So is it possible? I'm going to take some of all this off because the main thing is not where we are. It's where we're going, in my humble opinion. But I did these incrementally so you could kind of see where everything was. I'm just going to take all these lines off. And basically what we're looking for is just like gold and silver. We needed a new low. Bitcoin, our buy zone is down here at 50,000. It hits 50, buy some. It hits 40, buy more. It hits 30, or dips its toe into the 30s, back the truck up and look for opportunity for this thing to go ripping. We're in a cycle. If I condense this, you can see what we call Bitcoin halving, 2012, 16, 20, 24. The next halving is in 28. What do we know about halvings? 12 to 18 months post-halving, Bitcoin rips. 12 to 18 months post-halving, Bitcoin rips. And even way back over here, it doesn't look like much, didn't look like it did anything. But I can assure you, when it was trading in the zeros and it went into the lower 1,000, it was quite the move. I mean, I can take the time to show you that, but you stretch this thing out, and it was quite the move back then in 2012 when most people didn't even heard the term Bitcoin. But it was a thing of beauty. 12 to 18 months post-halving went from in the teens up to 1,200. Not too shabby of a run. 12 to 18 months post-halving. You get the crypto winter low. You start grinding toward the next halving. 12 to 18 month run. Look at that one. Whoa. Off the chart, my friends. That one is pretty big. Then 12 to 18 months, you get the crypto winter low. Then you start grinding into the next halving, 12 to 18 month run, rinse and repeat. Kind of topped out at 12 months, dipped and ripped again to 18 months, then ultimately topped and reversed. Remember 2022, Harold couldn't do any more. I sent smoke signals, preaching to the choir. I said everything, man, you're committing a crime to buy Bitcoin below 20,000. It is such a steal of a deal. And again, no buy, sell, to hold. I cannot tell you what to do, but when it was below 20,000, I couldn't have been more blowing the horn and the trumpet and everything else. Dude, not a bad idea to invest in some Bitcoin because this thing's going to go ripping. And this one was unique. We introduced the ETFs. We didn't have those over in the past, but we introduced the ETFs. And we talked about FOMO, fear of missing out. This thing ripped and actually made a new high going into the halving, and then we got the pullback. And then 12 to 18 months post-halving, where did we top out? Exactly 18 months. Buy below 20. And I was thinking 150. We didn't quite get there. We got to 126, whatever it was. That's not too bad, right? More than a 6Xer. So now the buy zone is down here. 50,000, buy some. Goes to 40, buy more. It goes to tips the toe into 30, buy more. Load it up. Because come 2028, 12 to 18 months post-halving. So what is this? It's a simple process. You buy low, you sell high, you buy low, you sell high. And what's the sell high going to be? 200,000 and above. And we're buying at 50,000 and lower. I like it. So this bubble is this bubble. We start pushing into 50,000, I'm going to buy. We push any lower, buy more. Push anywhere into the dipping the toe in the 30s. Buying, loading the truck, getting on my knees, going, thank you, another opportunity. And we hold it for what? 3 years, fall of 2029, we're going to look for this thing to be at 200,000 and above. Could it be at 300, 400, or 500? It could be insane. I still say that Bitcoin will reach $1 million one day. 1 million. And we're just going to keep going every 4 years. We rinse and repeat. We buy low, we sell high, buy low, sell high, and keep working it. How do I buy it? And buy straight up. You got crypto companies and brokers you can buy, crypto.com, Coinbase, etc. Even Schwab Crypto will be up and running by the time we're down up in here in the fall, and we're holding it to 2029. And buy a little bit of crypto. You can buy ETFs. You can buy leveraged ETFs. You can do a lot of things. No buy, sell to hold, but once it's down here, the projected target is 200,000 and above. And who's to say, yep, I said 150, we didn't quite make it. But 200, what if we only go from 40 to 180? What if? That's still a beautiful move. But I do think 200 is very logical. Just like 150 was logical, didn't quite make it, but we shall see. And who's to say this thing doesn't go ripping? Fair enough. So here's the next halving out here in May of 28. Could this thing start doing what we did last time? From this low, we kind of grinded, made a new all-time high before we hit the halving because of the ETFs. Well, those ETFs are still looming, as this thing could recover very quickly and go back to the 120 and 100 and above and break new highs before we get in there. Sure, did it once. Why not do it again? But even if it doesn't, it just kind of chops in this zone, gives me plenty of months. I can keep building a position to what? Look to sell in fall of 2029. So even if it just chops sideways for months going into the halving and doesn't make a big run, and it just chops sideways, that gives me a lot more time to buy a little something every day, once a week, once a month. You know, you can set those up with your broker. So I want to buy $100 a day. I want to buy $50 a month, whatever your budget can afford, and just build that position, because I sell up here or higher when we get to the fall of 2029. So we buy low, sell high, buy low, sell high, and we have a rhythm. It's been rinse and repeat over and over and over, rinse and repeat. So are we going to get to 50,000? In my humble opinion, I think we have a very high probability. So what about this bounce? Not really concerned about the bounce. If we can clear this little box, then we have some extensions. You know, use your 2.2. Got a high, we got a low. There's my 618786 zone. What happens if we close above that? Then we might push towards 68, 69. Maybe we get a little spicy. We make a run toward that magic Fibbo. Then we get rejected and pushed down at 50,000 and lower. But set an alert. You can set it on this chart. You can set it on any broker chart. You can go to your broker and say, yeah, Mr. Schwab on Bitcoin or anybody, any broker or crypto.com, Coinbase, wherever, and just set an alert. Say when Bitcoin hits 50,000, I want to know, or even set an order. When Bitcoin hits 50,000, I want to buy X number of dollars. It hits 40, I want to buy more. Good till cancel. It hits 30, I want to buy as much as I can. If it dips its toe in the 30s, because that's going to set off the rocket ship in 2029. So yes, it's a 3-year commitment. That's what we do. We buy low, we sell high. We buy low, we sell high into fall of 2029. So let's circle the wagons. Be careful. Dollar index. Are we going to go breaking out, or are we going to go breaking down? If we don't hold that back zone of 100.5, then we're likely going to magic fibbo. We don't hold that, then we're going to this low. We break this low here, we're going lower low. So the critical level to watch is that level right there. We close below that, we're likely going lower low. In the interim, this looks like an ABC. The proportionates are there. Typically, when you reach extensions, you go back to test where you broke out from. We're kind of on the fringe of that. Is this going to go breaking out? Maybe. But I won't call this the end of the show going deeper before we go off to that 131.40 target till we clear this hurdle. In the interim, be careful on IWS, ES, NASDAQ, Russell, etc. Be careful on this one because the bias is we need to go lower low. Daily magic fibbo is kind of where we need to at least visit. We don't hold that. 618 zone, we don't hold that. Then we go visit the fall in the fall, which would put us for the weekly magic fibbo. All I can say again is, what if William Bruce? This thing kind of tapers down, hits the daily magic fibbo, bounce, makes a lower high, lower low. We don't hold the 618. We go down and do the fall in the fall. So September, October, we're down here, salivate to buy for that next big run. And the potential for this 618/786 combo meal bounce could put us in the stratosphere for the blow off top, going into not only Santa Claus rally, but maybe first quarter/second quarter next year. And when we're up here in the stratosphere, if we get there, I'm looking to short it because I expect a massive correction coming thereafter. And most recently, that run, Harrow, is why we believe we're going lower low. That was a hell of a run. We at least need a 618 type of retracement out of that. And that is way down in here, about 6,800. Hundreds of points lower. So is it possible we could go breaking all-time highs? Yeah, but doesn't look like it until we break this lower high trend line. Likelihood is we're going lower low. We don't hold the daily. We don't hold the 618. We go weekly. And if we can get down here into the fall, October is kind of my time frame. If we can get down here for those that weekly magic fibbo in October, that is buy zone for this thing to go ripping into the end of the year, into first of next year. And NASDAQ looks even worse because of this same scenario. So you look at the index, you can clearly see there is no higher high. The contract we keep talking about looked like it made a higher high. When you go over here, that looks like we made a higher high, but we did not. From this one right there, looks like we made a higher high. We didn't. That's why when you look at this on the NQ, you can see we clearly did not make a new high. And I showed you that multiple times. So go back to the NASDAQ futures. That looks like we made a higher high, but when you change that to the September contract, you can clearly see right here, there is no higher high. That sets up lower low. How about that? So any rally should be sold. Look for this to start moving toward the daily magic fibbo. We don't hold that. Then we look for that 618-786 zone. That doesn't hold. Then we're likely going to visit my weekly magic fibbo, which would be down here. You don't see it on this chart because this is this current contract, but that's why we go back to this one. And if we can get that low, that high, 618/combo bounce off the weekly magic fibbo, potentially sets up the stratospheric type of move, even into the mid 40,000s. That means we get down here in the mid 20s, we could get to the mid 40s. It's a double getting up there. Wow. Potentially. I'm not going to say we get here, we're definitely going there. But if we get that, I'm salivating to buy for that run into the end of the year, first quarter, and looking for some stratospheric type of moves. So with that, I'll say good luck, God bless you, may the pips be with you. I'm humbled and honored to be your mentor and instructor. And remember some of the big dogs that Even they said, get out of chips, go into the hyperscalers. And Meta is one of my favorites that I'm looking for a big move to go up here to 1100 to 1300. 1200 is kind of the sweet spot in between the two. Even if we get that sell off, what can happen? The rotation, if we're rotating out of the chips into like Meta, hyperscalers, which would be Meta, it would be Google, Amazon, Microsoft, etc. Those can start rallying, continuing, even if the market dips a little bit. Why? Our markets have been going higher when the Magnificent Seven has been pulling back, way off their highs, right? You go through all of them, Amazon, all of those, Google, they pulled off of their highs, especially Microsoft. It might even push one more low below the Liberation Day low. All I can say is Microsoft gets down below that, and I'll show you what I'm talking about for Microsoft. I still think it's going to go lower low. This chart setup looks like we need to go lower low than this low over here. We came close. That might be the end. But if we can get one more little flush, make a lower low, this to me is salivate country for Microsoft, setting up a nice push into much bigger move into next year. Yes, Microsoft's got some issues. They just laid off like 3,000 people. What was it in their game? What's that game console called? The tip of my tongue. Whatever it is. They just laid some people off, so that fits the tone. We probably go lower low. And then the hyperscalers, because the AI crunch could benefit where the rotation is coming out of the chips into the hyperscalers. This could push price way up there. When all that money comes out, it's got to go and roll over somewhere. So if we can get Microsoft to do that dip, I'm looking for the opportunity for this thing to recover. And we have Google is also doing very well. It has a lot more upside in the future, but you get the same point. It's already holding better, much better than Microsoft. So I'd love to see a little pullback on this as well, setting up some stratospheric type of moves. But the rotation is starting to come from the chips into these hyperscalers. So this thing could push us. And when these things start ripping and taking off going in the next year, that could really set the tone for that blow off top for ES, NASDAQ, etc. So again, with that, I'll say good luck. God bless you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all.